So with all the changes in the budget, I've talked about BPR before, and I've got another topic to talk about, which I've been talking to a few clients about in the last few weeks, especially family investment companies. We often talk about the differences between setting up a trust for estate planning versus setting up a family investment company. And I just wanted to do a brief video to explain why I think we'll see more use of family investment companies. Both are perfectly legitimate tax planning models. You can mix and match. You might set up a family investment company which itself has trusts holding the shares in it, which might be suitable in certain circumstances as well. But I think there's a couple of changes from the autumn budget, which is why we'll see more use of a family investment company in preference to a trust. Firstly, business property relief restrictions. So the two issues we have when we set up a trust, let's assume I'm talking about trading companies for the time being because we're looking at BPR. When you gift shares into a trust, that is a chargeable lifetime transfer, and under the old rules, or the current rules because the legislation's not yet been enacted, you would get 100% BPR and there's no inheritance tax when you set the trust up and move shares into it. You'd also get no immediate capital gains tax charge because you get rollover relief when there's an immediate charge to inheritance tax. So no CGT on setting up a trust, no inheritance tax. Now that we will have a restriction on business property relief, that means that we may have an immediate inheritance tax charge. We could do what we do with family investment companies and issue growth shares to restrict the value that's going into the trust. Obviously, that might not be helpful if we want to pass a lot of value into the trust, and therefore the BPR issue remains. But I think the other problem with the trust route and why it won't be as favourable is because a trust that's a discretionary trust has a 10-year charge. So every 10 years, a discretionary trust has a tax charge of 6%. Where the trust is holding trading company shares, again, business property relief would normally apply to hopefully reduce that charge down to nil. That's not helpful when we now have a restriction on BPR, and therefore we might well have not just the inheritance tax charge going in, but also every 10 years. Family investment companies don't have any problem with that. A family investment company is a normal company that's set up just to hold investments for family planning purposes. The other issue we've got as to why family investment companies might become more favourable, before the budget, CGT higher rate was 20%, which a trust would pay. Now it's 24%. So any capital disposals by the trust have increased by 4%, whereas a family investment company, there hasn't been any change. If we're talking about the higher corporation tax rate, that's still 25%. So we used to be comparing 20% CGT charges for the trust versus 25% for a family investment company. Now we're comparing 24 and 25%. So there's a much, much smaller difference. The other thing we have in favour of a family investment company, if that company qualifies for substantial shareholdings exemption, which very broadly means that it holds more than 10% of the share capital of the trading company, it will pay 0% tax because substantial shareholdings exemption applies. So family investment companies can be very tax efficient if structured in the right way. With these restrictions to business property relief and the increase in CGT, I think family investment companies will become even more beneficial. Personally, I think they're quite valuable because they're quite flexible as well. But as I said at the start, there's lots of differences between the two. We need to look at all of those differences and understand the client's circumstances to ensure which one is the most suitable from a commercial perspective, a tax planning perspective, and a wealth management perspective. As always, like, comment, share. It lets me know that these videos are well received, and if you have any comments or interpretation of this legislation, really interested to hear everyone's thoughts.